this lesson, we're going to go through one of the most classic investment banking interview questions you might receive, which is to walk through how a change to depreciation affects the three financial statements. So recall what depreciation is. When you have a depreciation expense, that indicates that an asset that you own is losing value. So depreciation does not literally mean that you're actually losing cash or that you're paying for an expense with cash. It just means that if you own a house or you own a factory or you own a car, maybe you bought it for $1 million or $100,000, but over time it's going to get less and less valuable because of wear and tear, because of newer, better models in the market, and so the value, if you go to sell it, is going to be lower than when you first acquired it, and that's what depreciation is really reflecting. So that's the basic concept for depreciation. I'm just going to enter the change right here, and I'm going to work with all even numbers, relatively round numbers in this set of tutorials, because in interviews they're never going to say, how does depreciation going up by 14.93 affect the three statements? They're going to say, how does depreciation going up by 10 or 100 affect the three statements? So those are the types of numbers we're going to be working with in this set of tutorials. So I'll enter the depreciation number here first. We're going to say that in this scenario it goes up by 100. Now, when you get a question like this, the order that I recommend going in, as I mentioned in one of the previous videos, is to always start with the income statement, then go to the cash flow statement, and then finish with the balance sheet. The reason is that oftentimes there's no change on the income statement, so that's the easiest place to start. It's also independent from the rest of the statements. Then you want to go in the cash flow statement to make sure that you know how the cash balance actually changes. And then you want to conclude with the balance sheet, because at the end everything has to balance, and by making sure that both sides balance, you're ensuring that you've done the question correctly, that you've answered the question correctly, and that everything actually balances. So let's go to the income statement first and see what the effect is here. So depreciation is up by 100, which means that operating income has fallen by 100. Again, it doesn't matter whether depreciation is in operating expenses or cost of goods sold. All that matters for the context of this question is that operating income falls by 100. That means that pre-tax income falls by 100. And so as a result, net income is going to be down by 60, because remember, we're assuming a 40% tax rate here. You may want to confirm that with your interviewer just to check, but it's usually pretty standard to assume a 40% tax rate. So overall, net income here is down by 60. You don't need to mention anything on earnings per share, shares outstanding for this type of question either. Now, on the cash flow statement, we know that net income has fallen by 60. We know that depreciation is up by 100. So overall, our cash flow from operations is going to be up by 40 in this case. So we have that. Nothing has changed on investing or financing activities. So overall, our cash is up by 40 in this case, because we've had this net income fall of 60, but depreciation is a non-cash expense. We add it back because it's 100, and so we get to an overall increase in 40 on our cash flow statement. Now, on the balance sheet, what happens is on the asset side, cash is up by 40, and then plants, property, and equipment, PP&E, is down by 100, because this depreciation expense of 100 is directly reflected in the net PP&E number here. So overall, our total assets are down by 60 in this case. Now, on the liabilities and shareholders' equity side, no changes to the liabilities account because depreciation does not affect any of our liabilities. All that changes is that under shareholders' equity, retained earnings is down by 60 because our net income, if you recall, was down by 60, and this net income flows directly into retained earnings under shareholders' equity. So shareholders' equity is down by 60, and our assets are also down by 60. So both sides of the balance sheet balance, and our question walkthrough is complete. Now, what I just went over actually gives more detail than you need to give in an interview. You don't need to explain what depreciation means. You don't need to say that it goes into retained earnings specifically unless they ask you. You can just get away with saying that net income flows into shareholders' equity. So you don't even need to give that much detail. The important points to hit on are that operating income, pre-tax income, and net income all fall, that net income and depreciation are reflected on the cash flow statement, that your overall cash balance is up by 40, that cash is up by 40 on the balance sheet, property and equipment is down by 100, so assets are down by 60, and then on the other side, net income flows in, so shareholders' equity is down by 60, and so both sides balance like that. So that's a greatly condensed version of what you could say in an interview. So that's an overview of how depreciation changes are reflected on the three financial statements.